Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talk and I am Hiral Dadia. Clearly, a second consecutive session of gains is what we've seen in the markets in yesterday's session, and it seems that the movements have been pretty steady yesterday as well, because clearly it's mainly the pharma as well as the IT pack that has been leading these kind of gains. In fact, the pharma index did hit a record high level in yesterday's session and ended with gains of almost 1.5%. Clearly, there was some bit of buying interest that was coming in the auto, capital goods, as well as the real estate space. But it was interesting to see how M&M was one of the top gainers in yesterday's session, which ended with gains of a little over 4%. However, you did have a Tata Motors as well as a Bajaj Auto, which ended with cuts in yesterday's session. If you talk about Bank Nifty as well, it was a pretty sideways move that we've been witnessing with regards to Bank Nifty, and there's no differential with regards to the private banking space as well as the PSU banking space, and there is that bearishness that continues to remain with regards to the banking names. Clearly, what analysts are indicating is that this is a buyer's market, but buy on dips is the kind of strategy that investors should be adopting, because any dips in the markets should be used as buying opportunity, because everyone is still eyeing the 20,000 mark in terms of Nifty 50. Now, the timing is something that we should be waiting and watching. Overall, if you see, let's quickly look at the F&O and the technical side of the markets. If you see the open interest built up, that's indicating a build up in terms of long positions in index futures, and this is coming in for a second consecutive session. Earlier, if you see, the trend was that the shorts were increasing in the system, but now the tables are turning, and again you're seeing the longs that are increasing. Support in terms of Nifty is coming in at 19,300 to 19,400, so that's the zone that we are eyeing. And on the call side, the highest OI was observed at 19,700, which was then followed by 19,800. And on the put side, the highest OI was at 19,500 strike. Now, once we cross 19,800 in terms of Nifty 50, a further upside potential is what is envisaged as well. Let's quickly look at Bank Nifty as well. The support is coming in at 44,500 to 44,600 kind of levels, while resistance is placed at 45,200 to 44,350. Now, if you talk about the open interest built up, maximum is seen at around 45,000 levels in terms of Bank Nifty. And it's interesting to see how call writers are existing from the 45,000 strike, and that continuous exit is something which can actually fuel a rally in terms of Bank Nifty. So that is a level which is going to be crucial to watch out for. And if there is a break below those 44,300 levels in terms of Bank Nifty, there is a possibility of profit booking or longs that are built, they will be unwound as well. So watch out for these levels pretty closely in terms of Bank Nifty as well. But let's quickly take a look at the stocks in yesterday's session, which actually increased with a high amount of volume built up. One was Divis Laboratories from the Pharma pack. That stock has been doing pretty strong over the last couple of trading sessions. And analysts are of the opinion that the month of August itself is going to continue to remain strong. But apart from a Divis Laboratories, you had Biocon and Syngene from the Pharma pack as well, which did see a good up move with high volumes as well. M&M, as we already spoke about, also saw some smart moves, and this is mainly on the back of the commentary that we've heard from the management with regards to where the RBL bank stake purchase goes, the stance on that. Secondly, the investment that has come into into M&M's EV business by Temasek, and thirdly, the company's plan with regards to the EV business as well. So overall, lots brewing with regards to M&M, and the kind of sell-off that we saw last week, that's something which is again brewing that investor sentiment back into the counter. So lots of movers and shakers in trade to watch out for. But let's quickly look at the macro side of it. You have the RBI monetary policy, which is out. So on the back of it, you could see volatility specifically in terms of rate sensitives as well as Bank Nifty as well. As we know, the policy meeting starts today and the decision will be announced on the 10th of August. So watch out for the RBI policy pretty closely and the rate sensitives that will be in focus between today as well as the 10th. So that's going to be a space that we will be watching out for. But let's move on to earnings. It's the last leg of earnings that have been trickling in as well. Yesterday, Sesa did get us, what was the expectation from GCPL, which reported earnings post-market hours. In fact, Mika is now standing by to give us more in terms of what has come out of it and has met street expectations. Good morning, Mika.
Good morning,
What have been the key highlights from GCPL? Because FMCG as a sector has been on a positive trend over the last couple of trading sessions.
Yes. So basically, the company reported 10% revenue growth and a 28% EBITDA growth this quarter. However, these numbers missed the analyst estimates. The EBITDA margins marginally beat the estimates as it stood at 19.8%. The company also reported an 8% fall in its net profit to 318.82 crores. However, this profit degrowth was due to one-time cost that was incurred by the company due to the Raymond merger last quarter. Excluding the one-time cost, the company has seen a 19% profit growth this quarter. The company's India business sales grew by 9% to 2005.48 crores, which was led by a volume growth of 12% this quarter. The home care segment showed the highest sales growth of 14%, and the unbranded and exports segment grew 1% to 62 crores. The company has also approved a Capex fund of 900 crores for setting up new manufacturing sites in Tamil Nadu and Madhya Pradesh. The new sites will add approximately 20% capacity to the home and the personal care segments, which are currently at a capacity utilization of 75% to 80%. The manufacturing sites will come in stream in approximately 18 to 36 months and will be financed by a mix of internal accruals and debts. The sites aim to cater to the growing demand of the customers in the segments of home care and personal care, and in total consolidate the manufacturing footprint of the company. On a category-wise performance this quarter, home care showed the highest growth. Personal care rose 2%. The household insecticides continued to show double-digit growth momentum, and the personal wash segment continued to deliver volume-led growth. The personal wash segment saw lesser value growth due to the price cuts in the soaps. These benefits were passed on to the consumers by the company. And lastly, on the international front, Indonesia had the highest year-on-year sales growth of 15% in constant currency terms. The EBITDA margins improved by 420 basis points, which was led by trade promotion reduction. And the company plans to focus on the category development and increase in media investments for the Indonesia part of their business. And sales in Africa, in the US and Middle East grew 16% in constant currency term, while that in Latin America grew by 79%. I also have some brokerage notes. Nomura maintained its buy rating with a price target of 1,225 rupees. The broker says that the devaluation of Naira will impact the overall sales growth by 200 basis points. And Jefferies maintained its buy rating with a target price of 1,200 rupees. And the brokerage has cut its 2024-2026 EPS estimates by 3 to 4% to factor in the forex depreciation in Nigeria. And the India EBITDA margin, it stays of 28% was highest in the last 2 years.
And that's an interesting one to watch out for. Thanks, Mika, for getting us the details. So that's for GCPL, and it's interesting to see how the Capex plan, of 900 crores is going to pan out as well. But apart from this, Mika, you have a whole host of other earnings from the broader markets as well. Which are the names that you've been tracking?
Okay, so first we have MedPlus Healthcare Services, which missed revenue estimates but beat EBITDA, net profit, and margin estimates. Revenue was up 29% and EBITDA grew 35%, and margins improved by 36 basis points. The net revenue showed marginal, the net profit showed marginal growth of 2.3%. The company, as of quarter one, has 3,975 stores across India, and the quarter saw accelerated store expansion with an addition of 153 stores. Next, we have Soba Limited. The company showed weak results as it missed revenues on all fronts. Revenue was up 61%, EBITDA was down 10%, and margins fell by 5% to 7%. The company's net loss also grew to 12 crores this quarter compared to the 4.5 crores in the year ago period. The real estate margins were lower this quarter due to the recognition of projects that were sold pre-COVID and the constructions that were completed on an inflated cost basis. On the segment performance, the luxury segment demand has been seen growing significantly in the last few quarters, and it has grown to 49% of the sales contribution in quarter one compared to 36% in FY 2023. And Bangalore contributed to 54% of the overall sales. And lastly, we have PB Fintech that reported a 32% revenue growth. The company had an increased EBITDA loss of 65 crores compared to the 30 crores in the year ago period. However, its net loss decreased to 11 108.9 crores this quarter compared to the 204 crore loss that was there last year. The company's core online business grew 39% year on year, while its new protection business grew 40% year on year.
Thanks, Mika, for getting us the details. So that's a list of a couple of healthcare companies also that have reported numbers. But moving on, a lot of chemical companies that have reported numbers as well in yesterday's session. In fact, Varsha standing by to get us more details. Varsha, a whole host of companies that you've been tracking. What's the trend suggesting?
Yeah, so as you know, the chemical companies, there are headwinds in chemical companies, and few chemical companies which have reported numbers yesterday. The numbers were not that good. So first we have Sadhana Nitrocam. So while the revenue was up 43%, but there was degrowth in net profit almost 95%. Now this was due to increase in depreciation and finance costs. Plus last year company had a negative tax expense, while this year a company had a positive tax expense of 0.41 crore. The next company that we have is Tata Chemicals. Again, the revenue was up 6%. But if you see, the higher revenue was on account of better realizations, partly impacted by lower volumes. Also, the part, if you see, is lower due to higher taxes in some geographies, plus higher finance cost. The next company that we have is Rainbow Children's Medicare. Now, if you see, there was a healthy growth in revenues on account of increase in pediatric surgical cases and deliveries. Plus, being a children's hospital, quarter one is a weak quarter due to seasonality and the fact that the families go out for summer vacations. The next company that we have is Bayer's Crop Science. Now, revenues were up 4.3%, while net profit was up 8.55%. But now, there was this price normalization impacting the overall sales growth of the quarter, plus cotton seeds continue to yield strong results with volume growth driven by portfolio and better acreages in Kharif. The next company that we have is Foods and Eats. Now, the revenues were up 31%, but there was this unseasonal rains this summer, which posted challenges to the beverage consumption in Q1 of this financial year. Plus, tomato pulp continues to show promising growth, but company does not see as an impact as most of the contracts are cost plus in nature. The next company that we have is Gokaldas Exports. Now, revenues were down 15%, while EBITDA was down 16.7%, and the net profit was also down 17.4%. The last company that we have is Mangalore Chemicals and Fertilizers. Now, the revenues were down due to low realizations that we are seeing in all the chemical companies. Plus, there was growth in EBITDA due to decrease in expenses, the total expenses.
Right, so that's going to be an interesting pack to watch out for. Thanks, Varsha, for getting us the details. But moving on, we'll have Saloni who will be getting us more details in terms of a whole host of other numbers that have been reported from the broader markets as well. Saloni is here to get us more. Saloni, good morning. What's on your list in terms of the earnings?
Good morning. So first we've got Torrent Pharma. So the company missed top line estimates while beating bottom line estimates. So around 55% of the company's revenues came from India, which was a 15% jump year on year. Revenues from Germany and Brazil also saw growth, while the revenues from US saw a decline. Next, we've got Max Healthcare. So the company's revenue beat estimates. Approximately 25.1% of the company's gross revenue came from oncology as compared to 22.7% a year ago. Cardiac sciences and orthopedics were the highest contributors after oncology. Third, we've got Gland Pharma. So the top line and bottom line both beat estimates by low margins. The increase in revenue this quarter was due to the acquisition of Cenexi and the improvement of base business. The India market accounts for 7% of the quarter revenue, and it has also seen a growth of 29% as compared to a year ago. Then we've got Indigo Paints. So the company saw healthy growth this quarter, beating revenue, EBITDA, and net profit estimates. The company's special focus on Tier 1 and Tier 2 cities, along with various initiatives, aided the growth in sales by 28.8%. Fifth, we've got Jupiter Wagons. That saw exponential rise in its top line and bottom line by 155% and 390% respectively. This has been a good quarter for the company. Due to an improved product mix and the introduction of value-added products, the company saw a good EBITDA margin. Next, we've got ADF Foods. So the company saw a 15.7% rise in the revenue, while a 92.7% rise in its net profit this quarter. There was a substantial rise in the EBITDA margins this quarter as well. And lastly, we've got Balmer Lorry. So the revenue saw a decline due to lower revenue from the industrial packing and logistics services sectors. However, the net profit saw a slight rise due to decreased expenses.
Right. Thanks for getting us the details, Saloni. So, a whole host of numbers that are eyed from the pharma pack, I mean, the healthcare pack to the chemical companies and the others, which Saloni did bring us through as well. But moving on, if you see in terms of earnings, Coal India will be reporting numbers in today's session. It's going to be interesting to see as to what comes out of it, because clearly what the street is saying is that there is a transformation that is eyed from a Coal India. People are talking about the rebranding that could be happening as well in terms of Coal India. So a lot of announcements that could be expected from there. But Vikas is standing by to get us more details in terms of the key numbers and key points we should be watching out for. Vikas, good morning. What do you have for us?
Yeah, good morning, Kiran. As you rightly said, a lot of expectations from the company. But for this quarter, the analysts have expected that there will be some impact on the company's earnings because of higher employee cost and unexpected rainfall during the quarter, especially in April and May, which impacted the demand and the sentiment as well as impacted the offtake from Coal India. So as far as revenue from operations is concerned, that will be although marginally higher by 0.15%, but it will be impacted or has been impacted because of this rainfall, as I already said during the quarter, and affected the offtake, which only increased by 4%, whereas it was expected at least 7% increase in that offtake during the quarter. The revenue from operation is expected around 35,148 crore compared with 35,092, which was last year. As far as operating profit is concerned, or the EBITDA, that has been impacted by almost 30%. So it will come to around 8,676 crore this quarter. And this has also been impacted because of higher employee costs. So the employee costs have been affecting the company for last couple of quarters. And although the company increased the tariff or the price of high grade coal from G2 to G10, but that is not expected to meet up the profit or the employee cost which has been increased. So margins also have been impacted by 1,000 basis point. It will come around 24.68% in this quarter compared to 34.91%. And the net profit has also been impacted by some 29% this quarter. So net profit is expected to be around 6,277 crore. But overall, what the analysts are expecting is that the company is likely to do very well in FY24 because of various initiatives that the company has taken. Also, as far as Capex is concerned, they have increased the target to 780 million tons for this year. So that is likely to give a lot of surplus coal also in the market, which will go to non-regulated sectors. And e-auction premium, although it's come down, but the volumes will increase, which will impact the company positively. Thank you, Hiral.
Right. Thanks, Vikas, for getting us the details. It's interesting to see how the EBITDA that's going to be hit as well during the quarter, but a slightly somber quarter is what is on the cards. Moving on, staying with the earnings, you have two other bigger names that will be reporting names. One is Adani Ports. It's going to be interesting to see because the expectation is that the profit is expected to grow, and this is mainly on the back of higher volumes as well as the M&A activity. So watch out for Adani Ports in trade today, as well as you have a Hindalco that will be reporting numbers, but the expectation is that the profits are expected to plunge, and this is on the back of the ongoing work at their copper plant as well. So both of these numbers are going to be interesting to watch out for in terms of today's session. But moving away from earnings, a whole host of other names that are in focus on the back of news, from the likes of an HDFC Bank to a Maruti to Adani as well. Himansh is standing by to get us more details on the same. Himansh, good morning. What's on your list for today?
So, quite a lot of key developments being made. So, Adani Green Energy, for one, the Qatar sovereign wealth arm, INQ Holdings, bought a 2.7% stake in a bulk deal. The promoter entity on the other end, Infinite Trade and Investment, sold 4.48 crore shares, approximately 2.83% at rupees 920 a piece. This comes almost after a month where the renewable energy firm raised funds from GQG partners and other investors. Then we have BEML, where the company has secured a letter of acceptance from Bangalore Metro Rail Corporation, bagging a rolling stock order valued at 3,200 odd crores. Then we have 197 Communications, where PwC resigned as the auditor of Paytm payment services. This comes in since the company has a policy of any change in the holding company auditors will result in the resignation from the subsidiary companies as well. Then we have Lloyd's Metal Energy, where where the company is informed of an accident occurrence at their Guthrie in a district of Maharashtra. Accident caused due to overturn of a dumper on a camper. Then Railtel Corporation of India, the company has received a work order from Pimpri Chinchwad Smart City for over 10 years. The company is to provide end-to-end monetization of city network infrastructure on a revenue sharing model. The expected revenue from this contract is 70 crores annually, which on a recurring basis will amount to 700 crores over the 10-year period. Then Welspun Specialty Solutions has received orders for up to 37 crores for the supply of stainless steel bars from a domestic customer, and the order is expected to be executed by the end of October. Then MMTC has seen its license revoked as a stockbroker due to its participation in unlawful paired contract in connection with the defunct National Spot Exchange Limited. Then we have HDFC Bank, where the bank's weightage in the FTSE indices has advanced to 1.52% from 0.81%. And the company has also hiked its marginal cost of funds based lending rate, MCLR, by 15 basis points. And the new rates are in the range of about 8.35% to 9.2%. Lastly, we have Maruti Suzuki, where the board of Maruti Suzuki will be meeting today to discuss how they will be, compensating for the Suzuki Motor plant in Gujarat. They informed exchanges on Thursday that they'll be deciding whether it's going to be all cash based or through preferential issue of shares. So those are the key developments to watch out for. Besides these, there's all IPO updates as well, where Concord Biotech's has $187 million IPO has been subscribed by 7.09 times. And the offer is set to close on 8th of August. SBFC Finance, $124 million IPO has been subscribed by over 70 times. And then there's TVS Supply Chain Sets, the price range within the band of 187 to 197, and the total IPO is valued at around $106 million. So key developments to watch out for, and it's interesting to see how the stocks are going to react.
Thanks, Himansh, for getting us the details. A whole host of things, not only in the primary market, secondary market, I beg your pardon, but a lot of action in the primary market as well. And we will be watching out for key announcements that could be coming in from a Maruti, specifically from the update as to what's the kind of deal treatment they are going to give with regards to where the parent plant is concerned. So interesting ones to watch out for today's session. And clearly, overall, in terms of trade as well, there is some bit of positivity that we are seeing, but consolidation is what is on the cards, and buy on dips is the kind of strategy that analysts have been recommending as well, because everyone's tracking the journey to 20,000. That's all that we have on this session. Thanks for watching BQ Prime. Lots lined up during the day. Please stay tuned.